commodity prices have led to a downward shift in inflation from early 23-24, that is from the early part of the financial year 23-24. Nevertheless, the pace of disinflation is frequently interrupted by volatile and elevated food inflation. It is the headline inflation that matters. It is the headline inflation, with food inflation having a weight of 46% in the headline inflation, which the people understand. With the monsoon progressing well and the healthy kharif sowing raising prospects of better harvest, there is greater optimism now that food inflation outlook could become more favorable during the course of the year. However, I must add and emphasize that we have to remain watchful of how the forces impacting inflation play out. The balance between inflation and growth is now well poised. The balance between inflation and growth is well poised. You know, our monetary policy, the legal framework which the enactment in the Reserve Bank of India Act has mandated the Reserve Bank to achieve, is to maintain price stability, which is defined in terms of maintaining inflation at 4% with a tolerance band of 2% on either side. That is, it should remain between 2 to 6%, but the target is 4%. So the mandate given to the Reserve Bank under the Reserve Bank of India Act is to maintain price stability defined in terms of 4% target plus minus 2%, while keeping in mind the requirements of growth, while keeping in mind the objective of growth. So from that perspective, I would like to say that our analysis shows that at the current juncture, and also based on our outlook, the balance between inflation and growth is well poised. We must successfully navigate the last mile of disinflation and preserve the credibility of flexible inflation targeting framework, which is a major structural reform. The best contribution that monetary policy can make for sustainable growth is to maintain price stability. I would now like to turn to the third component of what I wanted to say, that relates to financial sector, strengthening the foundations for the future. India's financial sector has repeatedly demonstrated its ability to overcome challenges and crises. As a regulator, we have done our best during successive global shocks which the Indian economy faced, along with so many other countries. And I must mention here that it was ultimately the joint effort, it was ultimately the cooperation between the Reserve Bank as a regulator and the financial sector players like the banks, the NBFCs and other financial sector players. It is this active cooperation and it is this open door communication between us during these periods of successive shocks which has enabled our country to be where it is today in terms of financial stability. So the financial sector has repeatedly demonstrated its ability to overcome the challenges and the successive shocks from various global factors. The financial sector showed remarkable resilience during the COVID and also in the aftermath of the COVID-19 pandemic. Today, all key indicators of the financial sector demonstrate robust health. This resilience, combined with other forces, can act as critical driving forces for India's future. In this milieu, financial sector needs to even further deepen financial inclusion, broaden access to credit and other financial products, and support overall inclusive growth. It also needs to drive innovation in digital banking, foster sustainable finance, and build robust financial ecosystem that can withstand emerging challenges and facilitate higher trajectory of growth. With the financial sector now in a strong position, it is our collective responsibility to safeguard this stability, especially in an environment of heightened global uncertainty. Financial institutions must continuously assess and refine their business models, recognize and deal with emerging risks, and remain focused on capitalizing on every new opportunity. This brings me to the important issue of inclusive growth. But before going into inclusive growth, I think it's a point which has already been touched upon by the previous speakers and by also the presentation that was made here. I think a key focus area, and I'm not saying anything new or which is not known, but I feel it is necessary to constantly, keep reminding ourselves that these should be our priority focus areas. I think we have to be also mindful of several non-financial risks. The financial sector, the financial parameters of the financial sector today are strong and robust, but we also should be mindful of the potential, the sources of what you call non-financial risks which may affect the financial sector. And in this, I would like to include elements like cybersecurity, managing third-party risks, managing spillovers from a rapidly changing global environment, managing and adopting new technology into our operations, into our business practices, and several such initiatives. At the Reserve Bank of India, we have been embracing technology, and we are trying to keep up ourselves with regard to utilizing technology, with regard to utilizing AI in our internal operations, whether it is supervision or in other areas. UPI is a great example about which the whole country can be proud of. As you are aware, central bank digital currency, that is CBDC, e-rupee, we are one of the, we are among the very few countries which are running pilots. I would also like to mention, we have already announced in public domain, that we are setting up a cloud facility for storage of financial sector data of all financial sector players. And this is something which will be of particular benefit to the smaller entities in the financial sector, whether they are small NBFCs or they are medium-sized NBFCs or small private banks, or for that matter, the urban cooperative banks. So we are working on the cloud facility. It is work in progress. We have announced, in the last week in a conference in Bangalore, I announced on behalf of the Reserve Bank of India the launching of the pilot for the Unified Lending Interface, ULI. And I had gone on to say that, as you know, JAM Trinity has been talked about a lot. But the new Trinity, which can really be a game changer for our progress in the years to come, will be the new Trinity of JAM, UPI, ULI. So, and as you may be aware, we have already given out an agenda for RBI at 100, where we want to see the Reserve Bank in its centenary year in 2035. So let me now turn to the issue of inclusive growth. While traditional metrics of economic growth like GDP and per capita GDP are important indicators of progress, they alone do not capture the full picture of what it means for a nation to be truly developed. India has made remarkable progress in extricating people out of poverty. A truly developed India must ensure that every citizen, regardless of their socio-economic status, has access to financial services and has the required financial literacy. By expanding access to banking, credit, and insurance, and by harnessing the power of digital platforms, the financial sector can drive inclusive growth that extends to the most marginalized sections of our society. The priority sector lending, that is the PSL program, remains crucial in addressing credit gaps for underserved segments. Introduction of business correspondents, that is the BC model, has further enhanced financial outreach. The Financial Inclusion Index, introduced by the Reserve Bank of India, has improved from 53.9 in 2021 to 64.2, reflecting to 64.2 in 2024. That is the data we released on March this year, reflecting the strides made in providing access to financial services. Now, while we have provided access to financial services, there is still more to be done to improve the usage and quality of these services. Two more key drivers need to be prioritized. Enhancing financial literacy and leveraging technology. The Reserve Bank has engaged in both self-driven and collaborative approaches to promote financial literacy. We run multimedia public awareness campaigns, outreach programs, as well as targeted financial literacy awareness programs. The banks, on their part, are also operating similar awareness programs and financial inclusion, financial awareness outreach events. Now, collaborating with other financial sector regulators, the Reserve Bank has assisted in the establishment of the National Center for Financial Education, NCFE, to bolster financial literacy efforts. With support of banks and NGOs, 2,421 Centers for Financial Literacy, that is CFL, have also been set up, covering almost all blocks in the country. This is an important initiative which has been undertaken by the Reserve Bank, and 2,421 centers have been opened, covering almost each and every block of the country. On the technology front, the Reserve Bank, as I just mentioned, has taken number of initiatives to facilitate development of digital public infrastructure and innovation. The UPI has revolutionized the digital space, digital payment space. Other initiatives like Regulatory Sandbox and the Reserve Bank Innovation Hub at Bangalore have fostered a robust environment for enriching our fintech ecosystem. The commencement of the Reserve Bank's pilot project for frictionless credit, that is end-to-end digital platform of Unified Lending Interface, ULI, as I mentioned a little while ago, is expected to revolutionize access to credit, especially for farmers and MSMEs. Now, the final aspect I would like to touch upon is expectations from the financial sector. Having spoken about safeguarding financial stability and financial inclusion, I would now like to highlight some specific areas where I believe the financial sector can contribute to India's growth aspirations. Now, I have been in all my address talking about issues of risk management, compliance, risk management, compliance, assurance functions, and the like, internal audit. But today I thought, while those points are important, and I do emphasize them, but I thought I will take out a little time to talk on some focus areas which is something which the financial sector consisting of banks and NBFCs need to focus on and these are the initiatives which can go a long way to contribute to India's growth aspirations. And in that, the first one I would like to highlight is improving female labor participation. India's female labor force participation remains lower than the global average. The gap underscores the urgent need for targeted initiatives such as improving girls' education, skill development, workplace safety, and addressing social barriers. This is for everyone who has a business. This is for policymakers, authorities, governments, as well as the major players in our business and industry and in our financial sectors. Having said that, I would like to say that entrepreneurship is a vital component of economic empowerment. Entrepreneurship is a vital component of economic empowerment. Yet in India, less than 1/5 of MSMEs are owned by women. Women entrepreneurs often face significant challenges, including limited access to capital, restrictive societal norms, and difficulties in accessing affordable finance. The financial sector has a crucial role to play in bridging this gender gap by implementing supportive policies, creating tailored financial products, and leveraging fintech innovations to offer better access to finance. This can be pursued on two fronts. One, by providing higher employment opportunities to women in financial institutions, and 2, by supporting women entrepreneurs through government-sponsored schemes as well as banks' own schemes tailored to suit the businesses promoted by women. Banks could also actively explore onboarding larger number of women banking correspondents, that is BCs, and in some states they are known as bank sathis or sakhis, especially from among the SHG members. The next point, 2 points I have actually chosen to highlight are areas where the financial sector, particularly the banks and NBFCs, can contribute to our growth story. One, I said, improving female labor participation, including entrepreneurship, including encouragement and support to women entrepreneurs. I'm not saying that you do any I'm not asking that you dilute your lending standards, but within the lending standards, what I'm saying, the underwriting standards, don't dilute. I'm not asking for any dilution of underwriting standards. What I'm emphasizing is that within your parameters, within the underwriting standards the banks are expected and required to follow, there is considerable scope for tailoring products, for structuring loans and offering finance in a manner to support businesses promoted by women entrepreneurs, businesses, howsoever big or mid-sized or small. The second aspect I would like to highlight is supporting the MSMEs. With our large young population, we need to fully tap the potential of MSMEs to drive employment and economic development. Despite their importance, many MSMEs remain small-sized and unable to scale up effectively due to various challenges, with access to affordable finance being one of the barriers. The financial sector may play an active role in supporting MSMEs. Banks and financial institutions may develop tailored financial products and services that cater specifically to the needs of the MSMEs. These tailored products and services would include offering flexible credit options, improving access to working capital, and providing financial support that accommodates the unique cash flow cycles and growth stages of MSMEs. Now, this can propel the MSMEs to expand, enhance their productivity, and contribute more significantly to job creation. Let me now conclude. The Indian economy is forging ahead with macroeconomic and financial stability and a favorable growth-inflation balance. The policy mix pursued in the recent years has strengthened the underlying fundamentals of the economy and augmented the buffers. Consumption, which has been our main driver of growth, has picked up pace with recovery in rural demand. Investors' confidence is at an all-time high. Banks and corporates demonstrate robust balance sheets, and structural reforms are playing a big role in pushing forward our growth frontiers. We are living in a dynamic and uncertain world, and we need to remain vigilant and continue to build strong buffers. New opportunities are knocking at our doors, and when I look at the entrepreneurial zeal and the talent of our younger population, it makes me more confident of India's long-term growth prospects. Thank you. Namaskar.